Hey everyone, I'm here with Luke Morgan, another PII testimonial video. Thanks so much for joining me, Luke. How are you, my friend?
I'm doing great, man. Thanks for having me. I've been looking forward to this conversation.
Same. Hopefully, people could learn from it, from your experience, and it's all. I tell this to everyone. It's good karma for you. It's good karma for you
Yeah,
because you're putting yourself out there. You were kind enough to share your portfolio as well. We're gonna look over it. So first, tell me a little bit about Luke. Where do you live? What do you do? Tell me everything, or not too long, not your whole life story, but you know
yeah,
that.
for sure. I'll try to keep this as nice and simple as possible. I'm 43 years old. I'm living in Halifax, Nova Scotia. And I'm a personal trainer by trade, but I'm also a full-time investor. Over the last 6 years, I've been investing full-time. I've been in the markets for about 10 years. Um, yeah, life, other than that, things are pretty basic with us. My wife's a teacher.
Okay.
Uh, and we're pretty normal. Just really just kind of living this PII lifestyle right now that we've grown into. It's been a real crazy journey getting to this point we're at now. A lot of mistakes that I'm hope like to share with people that they can learn from, and hopefully people can find this conversation really useful in their investing journey.
Okay, cool. So you're Canadian, you're from the Atlantic side,
East
Canada.
Coaster, yeah. I'm originally I was born and raised in Cape Breton. For people that are from the area, I'm sure they know that area. So we've been in the East Coast for a while. We ventured out west for a little bit during our journey. My wife was a teacher out there for 5 years. So we did that little stint for a while just to mix it up a little bit. And we ended up making our way back here because, home is home, and out west is more of it's more of you go out there to work a little bit, you realize it's not home, and then you always come back to the East Coast, right? When
Yeah,
you're when
okay.
you're from here, when you're from here anyway.
And your teacher is like high school teacher, college,
And
what?
Danielle, yeah, my wife, she's an elementary teacher, 1 to 6.
Okay,
Yeah,
cool.
yeah.
Awesome. Nice. Nice. That's great. That's good stuff. And have you always been like a personal trainer? Do you do it? I'm just curious because I'm into, we've discussed this
Yeah, I've been.
before.
I see like you're really into fitness. So, I got into the trade about 15 years ago. I started out in corporate gyms, and then I ventured out and doing my own thing. I did a couple businesses. I worked for myself for a while. Then I actually built a gym in my prop at my house that I'll get back to that I ended up selling. But I built a gym in my garage that I ended up starting a business and training clients out of there for a while. But I've been in and out of it in so many different facets of the industry, but I still do it now. I still have a couple high-end clients that I keep that's strictly more enjoyment than anything.
Yeah.
But I'm really passionate about the health and wellness industry, and I'll describe a little bit. There's a lot of parallels with health and wellness that goes with investing too. That
I've realized that too a lot.
yeah,
Yes. The
yeah. There's a
industries are
lot of
there's a lot of parallels between the two industries.
they're very tribal. Like
Yeah.
people want to say that their way is the highway, and that's the
Oh
same thing
yeah.
with investing too, right? There's with health and wellness, it's one of those things that it's hard not to complicate.
Yes.
Everybody wants to optimize their health and wellness, but the real thing is that the more simple you can keep it and you can follow a simple plan, you'll get the best results through time. And that's really what I've learned about investing too. It's like
Mm-hmm.
the more simple you can keep it, the better you will do in the long run. And it's really, like I said, those are the two industries, like more than politics and religion. Those two industries are so tribal when it comes to exercising and nutrition, and honestly, investing is the most tribal thing I've ever seen in my life, where there's so many
Welcome to
different
my
ways to
world.
do it. Oh my God,
Yeah.
everybody thinks they have the magic formula to it, and it's personal. It's more
Yeah.
personal, individualized
Okay.
than any.
So tell me how you said you were in the market for 10 years. Tell me a little bit about how you got into investing. What's your investing experience from the
Yeah, sure.
beginning?
So I started out into working in the club scene when I first got out of high school, and through there I started investing into a lot of events, bringing musical acts into the city, and music festivals and stuff like that. And then I really wanted to get into real estate, so I got a house around when I was 25. I really wanted to renovate it, put money into it, rent out the rooms. I was young and single at the time, so when I got into the house, it was right after the financial crisis, and TFSAs just came out at the time. And when I was getting the house, I was obviously pitched mutual funds, and it was that typical low, medium, high risk thing. I didn't really pay any attention to it at the time. The stock market back then was not really, it wasn't very visible to me because there
Yeah.
was no social media. Nobody was really talking about it. I didn't know anything about stocks. It was really just kind of investing through private entities and events, and real estate was really what a lot of people were doing. So I kind of gravitated towards what I knew and the people around me. So I just kind of did this, your automatic withdrawal into a TFSA. They put it in the mutual funds, and I just kind of rode that for about 5 to 7 years. I never really looked at it, never paid attention to it. I was really more involved with doing things on the side with personal training and other types of investing. I did a supplement company, and a lot of those things really didn't fly, but I was always trying to, I mean, I've always wanted to grow my money. I had a growth mindset with money.
Yeah. You're a bit of a
Since,
hustler. You're a bit of a
yeah,
hustler.
definitely trying to turn a dollar into two all the time. You know what I mean? It was, but and then I got started seeing legalizing marijuana was starting to come. It was starting to be a discussion, and companies were starting to become formed. And I had a few friends that got in some private placements with Canopy and Aurora, and I had FOMO right off the bat. I was like,
Yeah.
I got to get involved into this because this is the next big thing. And I missed those private placements, but as soon as these companies came on the market, I got a trading account. I got all dialed in, and I put whatever I could into Aurora and Canopy, and I got in like super early, like 250 on Canopy and like 80 cents on Aurora.
Nice.
And and during that time, I never really paid much attention because I was in just, I'm going to invest. I'm not going to pay attention. This is going to be a big industry. I put a lot of money into it, and I didn't, and it really was kind of flat for a while because the companies were just being formed at the time. And then I think 2 or 3 years later, it started hitting, and and then anybody that knows that industry, what happened? It inflated. My money went from like I think I 10x'd my money in
Yeah.
like a matter of like a year, and as exciting as that sounds, it was the worst thing that probably could have happened to me because my whole perception of risk, which was just thrown out the window. It was like the stock market is easy. Oh my God, like everything had to be a 20% gain. You know what I mean? Because
Yeah.
that's what I was seeing, right? It's like I think you invested in
Yeah, I know all
Canopy.
about that. So I had
Yeah,
that FOMO too. This is before I became a real investor, which I feel is real.
yeah.
That's more speculating, but you don't know it at the
Oh,
time,
but it
right? I
didn't
didn't know
feel
it at
like
the time
speculating to
either.
me. It felt it. Yeah, it didn't feel like speculating to me. It just
Right.
anyway. So that was so I hit my peak, and then and then you experience true volatility. And then throughout the volatility, with the ups and downs, you see where your money goes and where it goes up and it goes down. And then I started like really getting into the stock market in that facet. And then I really got and wanted to trade. I wanted to trade the volatility. And to make a long story short, that environment and then that bubble burst.
Yeah.
And then eventually I really wanted to have I wanted my money to make me money. I decided that I want my money to work for me,
Right.
and this is what I want to do. I tried all kinds of different ventures and stuff like that, but I realized, I didn't want to work 9 to 5s. I wanted to be home. I wanted to work from my laptop. I wanted to be really independent. So I started a company to invest through because I didn't want to trade through my TFSA, and I didn't want to trade to my margin accounts. I didn't want to be looked at as a business. So my accountant
Yeah.
informed me that start a corporation if you're going to do active trading, and that's what I did. And long story short, that bubble burst in the marijuana industry. So I kind of pivoted out of that. And during the COVID pullback, during the COVID crash, I kind of pivoted into the stock market. And
Okay.
that was another bag of hammers because you could have thrown darts at, I got involved in trading groups and all that speculate. That was wild, wild west stuff that I don't know if we'll ever see that again, but that gave me a whole other false perception of risk because everybody was trading at home. People were making
Yeah,
so much
2020 was
money.
crazy.
It
2020
was
was crazy.
insane, and it was insane, and it was like, and I was doing well, but it was the emotions and the roller
Yeah.
coaster. You sell something, it keeps going up 20%, and I was doing that, and then, the peak of that, and then, I was riding high as my money was high. I was feeling high. I was like, everybody got a horrible dose of reality when the rate induced bear market came into effect in around 2022. And
Yeah,
that
when they started
really,
raising rates, yeah.
yeah, and that crushed me because those were the dips that just kept dipping. You know what I mean? It was, you can keep buying dips and they keep going up and you just get so used to it. But that particular, like, even the COVID crash it was sharp, but it was fast. It was only about two
Yeah.
months. This lasted about 10 months.
Yeah, it was
And
like all of
it,
2022.
yeah, it was like it just, for traders and people trying to navigate through that environment, it really it crushed me. It crushed my money, and it crushed me personally. It was a lot of stress. And throughout that process, I was like, this has got to change. Like, I can't be doing this. And then I started kind of venturing out, like taking a little break. And then I came across your style of investing. I came across your videos. And there was another guy doing it too. He was doing it on the US side. And I was really intrigued with income because I want to live off my money. And so the income
Right.
was really intriguing. And I started like, let me try this out. So I just dipped my toes into it. And back then it was like your H divs and HYLD, and I think your oils and ENCL and the
Yeah,
bank stocks.
still
It was
good stuff.
yeah, those were the ones that you kind of like dip your toes into back then, and I just got my feet wet with those, and it was nice to see the income come in, and then I decided, with my growth portfolio, my corporation, I was doing more investor trading type thing. I wasn't trading all the time. I invested in blue chips. I got off the risk curve, bought the Nvidia, Teslas, and Metas, and kind of traded my way back up, and I got myself back up in a good spot. And then I started, and then when USCL and QQCL came out, then I was really interested because I could invest into the US stock market. And then I really started putting more money into this strategy and following you throughout the whole process.
It's a
And
process, right? It's a learning
it's a,
curve.
yeah, I wasn't
Um,
go
but
yeah,
I
go ahead.
mean, you're no, I didn't mean to stop you or anything or
Okay.
interrupt. And there's a lag, so a lot of people say, "Oh, you're always interrupting," but it's just because of the lag. I'm way further. We're far apart. So anyway, no, but I like your story because it's actually not it's a pretty common one, to be honest, that I've listened to and that I've recognized because a lot of people got into the stock market in Canada, especially because of the cannabis craze, right? There was a
Hmm.
lot of speculation around that. And my experience with talking to people is that either people made a lot of money, they got the timing right, they pulled out, or they lost a lot of money. And I've heard some nightmare stories as well. I actually have a friend of mine who destroyed a lot of his TFSA room because of they went in the high risk stuff, the high risk speculative cannabis stock, which at that point, during that time, you don't think of it as risky, right? So even that term risk is very misunderstood in investing in general. And I always say risk is in the eye of the beholder, but it was a bubble, it popped. I don't know how they're doing now. I don't think they're doing that
Not
great.
very good.
Not very,
No.
not very good. They haven't
No.
really recovered yet, and
Oh,
things
it
like
was
that.
all
And
about, it became all about the US market after
regulations, right?
that. Yeah, the market with the US market was supposed to be the next big one. And I kind of held on to that dream for a little while. But then when you realize politics are, I'm not
So
relying on
slow.
American politics to make me a fortune. So like I said, I got out of it. I made a lot, and I made money in the long run. Obviously, I didn't take out at the very top, right? I mean, I didn't understand sell the news. I was really novice when it came to investing. But like I said, it was like I said, it was probably the worst thing at the time because ideally I wish I would have entered the market like, just investing in blue chips and good companies at the time. But I mean,
Mhm.
that's not how it was going to work for me. I wanted home runs, you know what I mean? And that's how I was kind of built
Yeah,
growing up. I wanted to get rich, and that's an evolution coming, growing up, we all want to get rich. A lot of people enter the stock market wanting to get rich, and I think that's a very, I think that's a very common progression. You come in wanting to get rich, you get humbled, you either learn or you get kicked out, right?
Yeah. Yeah, that transition from short-term thinking trader, speculator to long-term investor. A lot of people don't even know that, myself included, I thought I was an investor. I wasn't. I was like a short-term to medium-term swing trader. And just like you, I invested a lot in the Cannabis, in the Aurora, Organigram, and
Yeah.
I made more money than I lost for sure. I ended up exiting with maybe 10, 20 grand or something like that. But,
Yeah.
what I think is even more valuable than that 10 20K that you make is really the lessons in the transition into investing, which we're going to get into now. So you started seeing my style and describe the transition, that
Yeah.
period of time now after
Yeah,
that.
it's interesting. So like I said, I started like, maybe like let's call it like about 20% of my invested money was in PII at the time. And then when USCL and QQCL came out, then I became I'll touch at this point too. And I think
Yeah.
a lot of people when I first was introduced to this investing, I think a lot of people that I read the comments a little bit here, and I think a lot of people don't understand the income portion of it because when I first looked at it, I was like, oh my God, like I'm gonna make income and you know what I mean? It's gonna be great. It took me a little while to understand like how the income is distributed. Like I think a
Yeah.
lot of people think they can have their cake and eat it too. Like they're gonna get stock appreciation and income and everything is great because they talk like, well, I don't care. I'll hold Tesla or hold this stock forever as long as my income keeps coming. I don't care if it goes to zero. Like, well, if it goes to zero, you don't have any money, right?
Right.
You, so I had to learn through the process and I figured it out, you know what I mean? It was, through trial and error and stuff and get some. So once QQCL and USCL came out, I was like, well, this is getting serious. I can invest in the US market. I started throwing some money so as my growth portfolio was growing, I started converting more from my growth into my passive.
Okay.
And yeah, so it started coming. So the more I had in passive, the more comfortable and less, I had more patience with
Yeah.
my growth portfolio. Like I was still trading a little bit and moving money around and managing my portfolio and trading TQQ a lot. But I like the passive portfolio just made me so much calmer. Every time I put more money into that portfolio, I seen the income coming in because the point it was just first pay our mortgage. And then it was like, well, let's pay our mortgage and then let's pay some bills.
Yeah.
And then eventually we were about, I had about 30% into it and then life started coming. I think it was about 20 2023. The house, like I've had my house for about 16 years till the day we ended up selling it, but me and my wife, the house, it just started becoming such a burden, the liability of it. I became really frugal with money. I wasn't very good at enjoying my money because the house, and I had house and two cars, and they're liabilities, and
When you
they
say,
really.
well, sorry, sorry to interrupt. When you say house, is your investment or the actual house that you're
So
living
the
in?
house,
And
the house that I had that was like an investment was the house I was living in. So when me and
okay,
my wife got married in 2019, it ended up just being our principal residence.
right.
Right. And throughout the whole process, that was about 10 years. The house, I mean, if people own homes, I'm sure they can relate, but I believe my house was probably a little bit more of a lemon than other people's houses because whatever could go wrong with a house went wrong with my house. And
Mm.
I dumped a lot of money into it. And it was just one of those things that after dumping so much money into it, it was like, it was just robbing me of my joy. Like every morning I get up and I'm like, what's coming today? Or there's a
Yeah.
hurricane coming. I'm like, what's coming today? Like I just couldn't even enjoy my money because I never knew when a $10,000 hit was going to be coming. And when COVID came, we ended up putting more money into the house because that's what people either sold their house or they invested in their more money in their homes. And then I think one summer, and people probably in the area can relate to this, that one summer we had the worst forest fire and the worst rainfall all in the matter of 1 month.
Jeez.
And we got evicted from our home and we had a flood all in that 1 month. And I kind of just remember about 2 months later fighting with the insurance companies just to get that covered. I said to my wife, I was like, I think I'm done with this. Like, and I started talking to her. I was like, we can sell this house and we can sell everything and consolidate it into this strategy and literally have our life like income, enough income to cover our life. Like, you don't even have to work. And her eyes just started popping out. She's like, are you serious? I was like, yeah, because she never wanted to sell the house. But when she realized, like, it was, when she realized, wow, like she could actually leave her job. And I did all the math and I started, it's like, we could, so we said, let's do it. I said, life is too short. Like I said, like, we'll get an apartment and we can start enjoying our money. And we just, so we said, eventually we said, let's do it. And that was about a year process to get the house ready for market. Like, it's 16 years of about 15 different people living in there, the junk that was accumulated.
Yeah.
We sold we down, so long story short, after that year, it took us about 6 months to sell the house after the year, which is a horrible process trying to sell a house. But
It is,
about
yeah.
a year and a half, we sold 90% of our possessions. And once it was all sold, we found a nice apartment and I took all that money and invested it in PII. And at that time, I was probably about 60/40, 60 PII and then 40 into growth. And that we had enough income that could pay all our bills, our lifestyle. The most beautiful thing is that we had a fixed lifestyle. Like, everything was just a payment, a payment, a payment, a payment, no liabilities. Everything that was after our fixed costs, we could
Hmm.
enjoy that money because we knew the income was just coming in the next month. So it was like I didn't have to worry about windows and things, just appliances breaking, everything. Like, I could actually enjoy the money.
Yeah.
And
Plus you're
it was
renting, right? So it's a big pressure off. So
yeah,
what you're
it was
saying
and
is your portfolio covered all your living expenses, including your rent.
Yeah, and it was a culture shock. 'Cause I owned a home for 16 years, and it was literally just something that I just always had to be aware that it could take money from me,
Yeah.
and I really couldn't enjoy my money because of it, to be completely honest. And even moving into the apartment, it took me a while to like learn how to spend money, learn how to enjoy money. It was that crazy. It was like, and like, just to like wake up and like leave the house for a week and just turn the lights off, and that's all. I didn't have to worry about anything. It was it
Great.
was it
Yeah,
was
it's
wild.
a lot of people are going to resonate with your story. I mean, me especially because that's exactly what happened to us. We owned our condo, we paid it off outright, but stuff started happening. It becomes more of an annoyance and a liability than most people think. Yes, it could be a good investment, but in the end, if you calculate the actual mathematical
Oh,
returns and
yeah.
all the time and energy and life and just the stress, just an S&P 500 will destroy it in terms of
Oh,
investment val in terms of return every time, right? So I think a
so
lot of people are going to resonate a lot with the story and the process, especially us, because we discovered, hey, if we sell everything, put it all in PII, we could that's it. We could pay our whole lifestyle. We could pay off the rent and all our bills, and we'll even have a little bit of money left over, right? So it's a process you go through. You're a bit scared at the beginning. Your wife didn't want to
yeah.
sell the house. There's always someone who's a bit more skeptical in a marriage and a relationship because someone is typically handling the finances. But I like how when you explained it to your wife, her eyes opened up and the light bulbs came up. And I know you guys are good. You're having a great time now. And you mentioned, she could quit whenever but she's still working, right? It's not a matter of quitting. It's a matter of having the freedom to do so.
So right now, so I'll touch on that. So
Sure.
I'll just keep going with this part of the part of the story. So
Go
where
for it.
because for where we're at now with investing. So like, but first thing I say, because it was you that inspired us to sell and sell the house and invest, because that was your story, and it was your story about selling your condo, moving to
Yeah.
Panama. Like, I mean, we don't have children, so we're about the same age, same, similar portfolio size, similar portfolio. So we really resonate with you guys because we feel like we're in the same bucket, right? So, and I always keep showing your videos, like, we could do this someday. Like, we really could do this. And it was always, manana, manana, manana. Like, what we'll do it when we're this age, when we have this much money, you know what I mean?
Yeah.
It was like always moving the goalposts. And then, it's always something that happens in your life that pushes you to where you need to go. You could always say, and that was one thing with me with my money. It was always whenever if you made 1 million, it was 2 million, and then the goalposts always move. And I've learned that I kind of learned that through these last few years that there's never an amount. You have to settle at enough at some point. And
Yeah,
and and
exactly.
this is where I'm getting to. So, and then everything was so once we moved into the con and to our apartment, everything was going good. I was doing really good trading because I didn't have any. I was really patient and everything because I had all this income coming in. I didn't really care about it so much, and then and then everything was going good, and then the Trump crash comes in April, and then I got emotional because I kind of traded into it. I kind of got sucked into the media. I got sucked into CNBC, and I didn't even realize how much I was actually still being controlled by the stock market, by the media. I always had a bunch of
Mm-hmm.
influencers on the go. I never really thought about too much. I always thought it was, well, this is my job. You know what I mean? Like my go-to thing was to get up in the morning, check markets, talk markets, look at markets all day. You know what I mean? That was kind of like
Yeah.
that was my thing. I was addicted and obsessed with markets, even though I only had, it was still a big portion of my money was in growth and trying to manage that. And then when the Trump crash kind of came, I was like, I got emotional and I got affected by it. But you know what? I wasn't affected at all by the 60% that was in PII. That didn't bother me. It was the stuff that I was trying to control that really
Interesting.
bothered me. Yeah, and I was like, as I said to myself, is like, 'cause that I never felt that way until since the bear market of 2022. Like the emotions, I didn't feel like I wasn't sleeping again and stuff, and it was like I said, this can't happen anymore. And that's when I took the meeting with you because I said to my wife, I said, I think we should go heavy on PII, and because we can just reinvest what we're not using. Look at these great products that this is when HHIS came out, which really
Ah,
changed the game for me because all the stocks that I was invested in all was in the bucket of HH literally,
like the
except
growth,
CrowdStrike.
your growth portion.
Yeah,
Okay.
literally every stock that I had in my growth portfolio ended up being in the bucket of HHIS. Maybe I think the only one that wasn't in there, funny enough, was Reddit and
And now it
Robinhood.
is.
Now it is, and
Yeah.
CrowdStrike, cybersecurity, which I hope they get some cybersecurity exposure someday because I think that's a great industry to have in there. But I'm sure they will. And I was just thinking to myself, is like, why do I have to have these stocks when I can hold them in this bucket and just do this strategy and I don't have to I just reinvest what we don't use, we'll let it grow, and eventually we can why not? Well, what's the difference? Like, I'm not worried about this because I see the income come in, I just spend my income, and I needed a break from the stock market. So we took that meeting with you because I really needed to understand everything. I had questions about just the distributions, and we had that meeting with you and we clarified everything just so I could feel way more comfortable with making
Hmm.
that big jump because I was going to drop another 30% from my growth portfolio into that, so I was going to be like 90-10. And that meeting with you was fantastic. I felt good. And I did the flip during sometime in around April when everything was down. I flipped it all into HHIS and QQCL, like, you know what I mean, in the tech sector and that. So it's really just it's it you know
It's a
it's
progress.
hard.
It's the natural. My wife and I are starting to come up with a famous saying now: all roads lead to PII.
You
And,
know
and you're,
what?
you're you're perfectly describing the typical thing that usually happens when someone is maybe hesitant to go all in and maybe I'll keep a bit of growth, and we're always the ones to say index funds growth is great. It's fine. It works long term. But you have that problem that you just described. You're going to have to sell it at one point. So why not just transfer that exposure and get the same exposure in a different way with much less risk? Because now, like you said, you're getting the income. You don't really care. Also, instead of individual securities, which is the highest riskiest thing in investing, right? Owning one company. You have a group. You have now, there's HHIS, which is now 19 stocks. You have QQCL, which is literally the NASDAQ 100.
Mhm.
USCL is literally the S&P 500, right?
Well, that's just it. And the beautiful thing that I've noticed since I've did this transition, well, when you're trying to manage your own portfolio, it's there's emotions because, if you have X stock, the market's going up and three or four of your stocks aren't performing, you get emotional, right? But you look at HHIS, it's, so for example, Nvidia goes up 10, 15%, that'll bring HHIS up a couple points, but when you're consolidated into that 2 points is a great return. You know what I mean? How much money am I willing to put on one stock? But if I have everything in HHIS, and that all comes up as a unit. You know what I mean? So instead of
Exactly. And
worrying
you
about instead of
far
wor-
less risk, less emotion. You have more
less
time and you
emotion.
you liberate your energy and your mind for other things that you could focus on, right? That's
Yeah.
when you grow older that it gets more and more important to you, time and energy, and you could focus on other things. Like I'm sure you've got a bunch of other business ideas and there's personal training stuff you could focus on, right? So
Oh, so like
totally
I
get
mean,
that.
soon as I made that transition, I literally like I basically I hit a roadblock with the stock market. I tuned it out. I invested everything into it. I realized like I mean the thing with the stock market is when you have a significant amount of money or if you're trying to live off your money, there's an attachment to the market.
Yeah.
With I say an attachment to the media, to influencers, to social media, whatever the case may be. And I think the hardest part about investing is how to manage that noise
Yeah.
because it's hard and it's really hard. And I realized that I needed to walk away from it. Like I was a CNBC guy, like I watched it all day and I'd watch my YouTubers when I was at the gym. And I felt like it was my job. I needed to know everything that was going on so I could act accordingly. But since I moved everything into 90% into PII, I just don't care. Like I check the market once in the morning and then once at the end of the day because it's fun. Yeah, I got to see what's going on, but I don't watch it anymore. You're the only YouTuber that I watch because
Oh,
I like to
okay.
know what's going. I like to know what's going on in the industry. You keep us updated on the. I'll never know about the new products that are coming out, and this landscape is evolving so fast, and the
Yeah.
products keep coming out. I need to know what's going on if I want to make just if I'm 90% invested, then I want to watch you because you're giving us all the information about everything that's going on in this industry. But when it comes to investing, I literally realized that. I will always wanted I love being an investor. Like I want to be a compounder. I want to like Buffett and Munger it, you know what I mean? Like that's the type of noise I'm putting in my brain right now. And
Yeah,
so I
you don't have
I
to
want
watch any of that stuff. That stuff is like, I kind of understand how people watch that stuff every day. Like, once in a while, I'll watch it because I'm curious and it'll pop up on my
yeah.
YouTube. But, like, typically after 10, 15 seconds, I just realize it's like you're watching the Weather Channel. It's just completely useless. Like, what? So, this is going on, that's going on. What do I care? I'm a long-term buy and hold investor, right?
Hmm.
So what's the difference? That's only stuff to, I don't know, like you said, you could get emotional. It causes people to do rash things. So this is why I really enjoy this style of investing. And I really appreciate you kind of talking about the emotional side of it and the progression and the stuff that you're learning to like, well, it doesn't make a difference to me. All roads, you're gonna start learning that it up and down, it doesn't matter. So if you're a long-term investor, you're holding the Nasdaq 100, the S&P 500, which is essentially what USCL and QQCL is. HHIS is like a maybe a little concentrated version of that. What do you care what's you're thinking long term. The market goes up over time, and of course, there's always going to be like the April crash,
Oh
and
yeah.
newer investors get scared. People like me, I see that as this is a great opportunity. It's an April flash sale. I guess Boxing Day has come early today. So when you change your attitude into thinking long term, you have no fear anymore.
Oh
It's just
man, it
fantastic.
was and the progression was like when I after the meeting with you and then doing it, there was this there was this like feeling over me that like it was almost like a withdrawal of like a market withdrawal that I had to go through for because I'm like no, don't look. Like I wanted to look at the markets all the time and I was like it took me a while to get over, but once I got over it, and this is the best thing to share with people is the level of stress and anxiety that left my body. I never even knew it was there. Started sleeping like a baby. I mean like the calmness that came over me. My thoughts were focusing on other things and
Hmm.
I would never be able to held I would never have held the market to this point of where we're at now to this level. If I
Hmm.
was still trading, I would have bailed out probably I don't even know when, but I don't think I would have ever have held on to this long. And if I imagine I'd be pretty stressed out trying to figure it out at this point. You know what I mean?
Yeah, I mean,
And
everyone's different. Some people are more emotional than other
yeah,
people, right?
oh, like,
So it could impact you. You could get scared, and emotion is literally your worst enemy. If you're an investor, you're a long-term investor. You know, my wife says sometimes I'm like the Terminator. I'm a robot. I have no emotions, and I feel like that makes me a good investor because. But it's really mindset. When you see a big sharp crash, people get scared, but when you see this giant these especially the tech stocks, and they go up and up and up and up and up and up, nobody ever says anything about that, right? But then when they crash 10-20%, it's the end of the world. But if you just zoom out 5 years, you're still seeing this giant thing. So the markets go up over time as long as you have that knowledge, you stay cool, calm, collected, and you say, look, I'm not going to sell anything anyway. This is a discount. I'm just going to buy a little bit more. Like you said, like you were telling, like you were explaining earlier, what we don't need, I could just reinvest, and I'm growing that way,
exactly.
right?
Exactly. And I think the biggest thing that I have to say about PII is that it's the psychology that this
Yeah,
investing strategy gives you. It's like it's just being able to, like, for somebody that wants to live off their money or they want to retire off their money, the psychology of this system, this platform, it's where it's at because you get to see the income coming. And now I'll just touch base though. The best thing about this industry is the evolution that we've seen over the last couple of years with the
yeah,
products,
yes,
because I don't
yes.
know if I could, and with the leverage, because I don't know if I could comfortably do it if we didn't have the growth to invest in. Like, I know banks and oil they're good stuff, but I need to be, if I'm going to comfortably spend my income, I need to know that my underlyings are going to grow in the future. You know what I mean? For me to comfortably spend it, because I want to eventually up my spending and my income. And I
Yeah.
want to know that the stuff that I'm invested in, I have confidence that it's going to go up to the right consistently over time. I know there's crashes and stuff like that, but these all-in-ones, these index funds that we can now invest in.
Yeah.
You know, I don't know if I could be in bank stocks and oil stocks, and even if I just really wanted to be in the American stock market. And now that we have these great, and I think it's only going to get better. You know what I mean? Now we
Yeah.
can invest, we can invest in Bitcoin now through these types of products. You know what I
Yeah.
mean? So everything that I was invested in before, I can now be invested in, and the psychology of getting the income. I feel comfortable spending this income because I'm confident in what I'm invested in, that it'll keep going up. I mean, I think that when you're holding some products, you have to have a confidence that you're going to have the growth, because if you don't get growth in the products, then you're kind of just spending down your investment, correct?
Yeah, that's exactly it, right? So you know, if you hold the S&P, the Nasdaq, you have to have conviction in what you're investing in. If you think oil and gas stocks are going to go up over time, or gold stocks are going to go up over time, you'll have a gold ETF or an oil ETF in your portfolio. If you don't really have that conviction, I tell people, if you don't have any conviction in anything, go with the S&P or the Nasdaq. Go for wider, broad base. Go
Mhm.
because it's almost impossible not to have the conviction that the stock market in general goes up over time because we have like 100 years of data on that,
Yeah, and
right?
it's gone
So
through. Yeah.
you are right in the sense that the distributions that are coming out of these funds every month, yes, they're covered call premiums, but they're part of the net asset value. It's almost like Harvest or Global X is kind of selling a portion of your investment for you every month and
Hmm.
giving it to you in cash. You have the flexibility to do whatever you want. You could spend it all, you could reinvest half of it, reinvest all of it. That's the psychological benefit of this strategy. It's like because that allows you, or that puts in your head, well, now I don't really ever have to sell anything. So a crash or a big dip is not going to bother you as much. If anything, with the experience, it's going to excite you because you're going to be like, oh, well, it's a discount. I'm just going to buy more this month, or you know what I mean? So you're exactly right in how it, it, it it's easier psychologically. And with time and experience, trust me, my friend, you'll be boring. This will be the
It's
boringest
already
thing in your life.
It's already boring, and
Yeah,
and I
good.
love it. Like, I think I used to make, no word of a lie, I think about God, maybe 50, 60 trades a month. And
Oh,
I think
geez.
I haven't even, yeah, I haven't even made since April, since I got into this, I probably made maybe 20 in like 6 months, just swapping, you know what I mean?
Yeah, swapping,
Stuff out. Like
rebalancing, that's
I'm
okay.
so inactive, I'm so disconnected from the market, and it's such a beautiful thing. Like it's kind of crazy because I would never be able to feel the way I feel right now if I didn't if my path didn't go the way it did. I had to go through the wild, wild west to get to this level of comfort because if I would have jumped, you know, because it was going to get me no matter what. You know what I mean? I'm attracted to fast, shiny things. You know, when I, you know, I had a it's a progression. You know, you have to be humbled to
Yeah.
realize that this is the right way. You know what I mean? If that for me anyway, I kind of feel like that's the only way I was ever going to get to this. I had to go out, make mistakes, make a lot of them, and just really learn from them, right? And a lot of that has to do with greed, because you kind of have to be able to say like, wow, like if I was like I pulled money from everywhere, everything I private placements, crypto wallets, I sold everything and just put it all together. And I was like, I'm done with this rat race of trying to get all these things, taking all these big swings. I consolidated it all. And now I get to watch my money grow as one big unit. So when the market goes up 1 to 2%, it's a beautiful thing because all my money is growing with the market. It's not this little basket is being left behind or this basket is going up without this basket. It's all going up together, right? And that's what I really love about this transition that I made. And you know, I always kind of said, you know, S&P boring, boring, you know what I mean? But you obviously learn that it's not. There's there's some wisdom to real wisdom to the people that tell you that are a lot older that you know that index investing is boring, but it is the right way.
Yeah, it definitely is a good anchor. I always like to
An
call
anchor, yep.
them, make it a good anchor foundation of your portfolio, especially if you're just starting, because it's almost like it's impossible to go wrong with. You can't go wrong, right? Just hold, whether it's with a covered call or not, you just can't go wrong with the overall American or
Yeah,
worldwide Canadian economy long term. And then with time and experience, you'll develop your convictions. And if you feel strongly about gold, you'll add some gold. Oil, you'll add some oil. Bitcoin, you'll add some Bitcoin,
yeah,
etc.
it's
So it
whatever.
comes with time.
To whatever your convictions are. And like I
Yeah,
said, people, the best thing, what this is really for, like like you said, you could just go and buy S&P growth, buy NASDAQ growth, and that's fine. But if you really want to, but what this is really designed for is like people like you, people like me, people who want to live off their money, who want to be done with the rat race that society tells us that we need to hustle, 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 make more, and
yeah.
not enjoy our lives. We enjoy them when we're this age, blah blah blah. Like I'm like no. Like I've done all that super early, thank God, and I realized like that is not the most beautiful thing about this whole thing is that so my wife, she's been working full time as a teacher, and it's been really hard on her. It's been hard on us. My
Right.
stock trading's been really hard on her as well. So this took me away from that, and she got away from teaching full time. She's teaching right now, but she's only teaching 2 days a week because she enjoys that. That's her choice. She doesn't have to, but she just enjoys it, and she's working at a great school with great kids, with
Awesome.
great colleagues, and she just loves it. So that's her choice. Her enjoyment is intact, and I love what I do. I can do whatever I want, but the most beautiful thing about this is that we have our nights together and we have our mornings together to be present with one another. Because when she was teaching and I was stock trading, my mind was out of the market, her mind was out at teaching, and we were never truly together. You know what I mean? Now that we have this sense of stability, we're both now able to be comfortable. You know, like she sleeps well now. When we're together at night, we're there, and when we're in the morning, we're having coffee together. Like those 2 hours, you can't put a price tag on that. You know what I mean? Like she's not rushing to work. You know what I mean? There's, you know, in stressful situations, we literally have our mornings to relax and talk about how we're going to enjoy this new pace of life, and it's really exciting.
Man, you're gonna move me to tears, bro. I mean,
No, man,
I'm
it's
resonating a lot, and I
yeah,
really
I'm just really
appreciate.
happy. Yeah, I'm really happy to be able to. The best thing about this is taking her away from her stressful job, because it teachers, I mean, teachers, nurses, those types of professions where we need them, and they don't get the recognition or the pay that they should, and it's really sad. And they work way longer than they should have to. And watching
Yeah.
my wife come home in tears once a month and being stressed out at night, not sleeping because she doesn't know how the day is going to go, and be able to relieve her from that. That's been the best gift that we were able to do. You know what I mean? And that was a lot to do with me being able to, like, having to stop trying to control things and just taking what we have and making it work, and stop trying to, like, move the goalposts and saying, no, it's got to be, putting zeros at the end of something, that we can do it when we have this much money or this much money. We have the money. It's just, are we willing to be different and take it?
You are an example, my friend. You are, thanks so
Well,
much for
you
sharing.
you helped me out a lot, man. You really were inspirational in your story, and it really helped us out a lot to for the
I'm
guidance.
glad. I'm happy for you guys. I'm very proud of you guys. I did meet your wife as well. So
Yeah.
I agree with everything you said. I mean, teachers, nurses, they're all undervalued. Police officers, firefighters. I
Yeah.
mean, people in the military.
Real workers.
Sometimes thank real workers,
Yep.
and everyone deserves to have a load off. And this is a system that could help. And I'm happy it's working out great for you.
Yeah.
That you're spending quality time together. It's really phenomenal. So before I let you go, you were kind enough to provide your portfolio. So this is it right here. Let's go through the portfolio real quick because I'm sure people are curious. So you have
Yep.
25% in QQCL, which is essentially the NASDAQ 100 with covered calls and 25% leverage, which almost gives you like a delta of one to the actual net NASDAQ 100 in terms of total returns. Very close.
Hmm.
HHIS, kind of like a concentrated NASDAQ, right? You got those 19 more tech heavy innovation stocks. You have HBIX, which is Bitcoin. So obviously you're a firm believer. You got conviction in Bitcoin, which
Yeah.
has been a little bit flat lately, but we're thinking long term. We're investors here.
That's right.
USCL, you got your S&P 500, right? It's the QQCL's a Nasdaq, USCL same format, but on the S&P 500, so even more wide. You have HYLD, which is kind of an S&P 500, little bit of IBIT, and a tiny little bit in gold producer. So run me through your portfolio. Pretty boring portfolio, I would say, and that's probably the point. Tell me about it.
Yeah, so this has been streamlined, like this. So like I said, when I first kind of moved it, I had a little bit of like Tesla and Nvidia in there, and then I streamlined that into HHIS.
Yeah.
When it comes, so those are pretty self-explanatory. I consolidated all my stocks into QQCL and HHIS. That's kind of my anchor that I kind of really wanted to focus on. I mean, I'm a firm believer. I think that we're a tech-driven world, and we're
Mm-hmm.
gonna continue to be. I mean, I don't see that changing. And with HBIX, I feel like I'm a little overweight right now in Bitcoin. I mean, yeah, it's a little sluggish right now, but I'm looking at it the long term. Bitcoin's going to
Yeah.
do what Bitcoin's going to do, and it's going to do it. You know what I mean? It's never a smooth ride with it I'm not in this camp of calling 2,000 Bitcoin or 1 million Bitcoin. I think that it's going to be a consistent gainer. Do I think the outsized gains are a thing of the past? Probably, but I like that. I don't need crazy high peaks and high drops. I don't really want to take outside risk with MSTE or the HBTE. I did have some HBTE, and I ended up consolidating that into HBIX.
Okay.
I just don't want to take. It was just a little too wild for me. If I want to draw from my portfolio, I don't want the emotions of something that's going up 100% in like 6 months. It's exciting, I get it, but I
It
really
kind
just
of
want.
reminded you of the cannabis days, and you're like, you know
Yeah, I
what?
just
Let me
don't. I
just
don't
get
need.
the Bitcoin. Well, this is cool, man. Everyone has their conviction. It's good that you're explaining your
Yeah,
conviction.
it's you know what I mean. It gives me the exposure. If I'm gonna have Bitcoin exposure, then I'm just gonna have the Bitcoin, and that's enough. So USCL is on a loan right now. That is going to be converted. I do see your side where you got rid of your USCL, and because when you go, I back tested it, and if you look at the gains from the Nasdaq with the compared to the S&P 500, they're
It's
almost.
big.
Yeah, in 10 years, like I'm pretty sure the Nasdaq has doubled the S&P 500, and I just feel like that trend is more than likely to continue. So I will be swapping USCL, maybe into Q Day, maybe into some
Yeah.
big wad. I'm still just taking my time with that transition. I won't be surprised if a new ETF comes out or two more ETFs come out. So I'm just taking my time. The market's super high right now, so I'm in no rush to do it. And I got a question for you actually. Why do you keep HYLD if it's really an almost a comparison to the S&P 500?
I like it.
You
I
just,
like
yeah.
it. And another reason is like it has the S day and the Q day as well
Hmm.
now, which I also like. I like the team at Hamilton. I like what they've done. I like the total returns. It's since HYLD 2.0, I like to say, it's outperformed VSP, the actual S&P 500. And for
Yeah,
me, it's along with QQCL, those are my two anchor
yeah.
foundational boring positions.
Your
So I
indexes,
it's
yeah.
just I feel comfortable with it. I kind of saw USCL kind of like a duplicate
Hmm.
of QQCL and HYLD together. So I just decided, like you said, it's just a little streamline. I was talking to
Yeah.
Gary Gill about it the other day. His podcast came out today about it, but there's nothing. I like USCL. There's nothing wrong with it. I just wanted to streamline it a little bit, and I am skewing more towards the Nasdaq 100. And guess what? The Nasdaq 100 S&P 500, it's got like over 50% overlap now. Like there's rarely a day where you'll see the S&P and the Nasdaq diverge. Like they go up together, they go down together. There's so much, and I'm a believer in technology as well. So I'm gonna keep my HYLD. I really like the HYLD. It's it's one of the only positions I have that's hedged to the Canadian dollar, so that could offset everything else that's not hedged. So there's so many little reasons, but maybe in a few years it'll change. Our convictions will change, and we'll go into something else. But I just feel like it's a good anchor
Yeah,
position.
no, I agree. I like the, I agree with you. I was just curious about how you would explain that. I'm going to keep that as well.
I like
And
Q-Day
I,
also as well. I think that's a nice complement
which
to
one, sorry?
QQCL. Q-Day.
Okay, yeah.
I like that
Which
one
is
too.
like
Very
which is like
innovative.
the XL.
Yeah.
It's like the XLK, right? Which is just basically a nice tech driven index.
What I like about it is that it is an index,
Hmm.
right? I
Yeah,
like indexes a lot because you're always sure you're just going to get the best exposure to the best companies. It's just a tech index. But if you actually
yeah,
look at XLK, which if you're investing in QD, you should know what XLK has.
yeah, I do.
Almost half of it is Apple, Microsoft, and Nvidia, but Oracle's there, AMD's there, Broadcom is there, and you actually have like 60, 70 stocks in there, but it's index based. So the smaller, but maybe, the smaller the company is, the smaller the market cap, the smaller percentage. But let's say there's a breakout tech company, it's going to go up. So I really like the index style. So HYLD, QQCL, QDay, they're kind of like my anchors. And I think the average of them is the NASDAQ 100 index.
Yeah.
Kind of. That's how I see it, kind of. And I'm just very comfortable with it. I like the strategy of QDay is very innovative. I like that you have uncapped, there's no cover calls on that XLK portion. So if tech keeps running, QDay is going to do really, really well. And it has been doing really, really well.
Yes. Yeah.
Uh,
So definitely that's definitely on my radar for a swap with USCL. Yeah, so I'm very excited about doing that. I'm just being patient with it. I'm in no rush.
yeah.
I probably could just swap at any time, but
You see
like I
how
said,
boring PII is? I mean, now you're like,
that's I'm in no rush. I mean, the income's
exactly.
coming in, the S&P is going up. It's all great. There's like I said, when I do this, it's going to be for the long run. So there's no rush. I obviously want to see what kind of just comes out. Kind of want to see how things just kind of play out in the next few months. But that I will be doing that transition. And then do you want to just pop up the rest of it there so I can go
Yeah, of
through the rest?
course.
I think that
Sorry about that. There it is.
worries. No worries. Oh yeah, and then so I bet this is in my growth portfolio. So this is just something I had that I never transferred. This will be something that I will sell off in the future. If Bitcoin, has a nice big run and it gets because I want to keep my growth portfolio. I'd like to be able to have it to be liquidated at times because I would like to have some liquid funds available if I ever want to, get foreign property or something like that. I want to have some sort of liquidation. So that's kind of that. That's kind of on borrowed time because I have my massive position in HBIX that will be just, set it and forget it type
Yeah.
of thing. So,
There's
and I am
actually
also
there's very little difference between HBIX and IBIT, to
Yeah,
be
they're
honest. Very
essentially the
little
same thing.
difference.
It says for me, it's in my growth, it's in my corporate account. So
Yeah.
if I ever want to transfer if I ever want to buy property, I can buy through my corporation.
Oh, I
So
understand. Okay, it makes
yeah,
sense now. Yeah.
so I want to be able to have the option to, I might even, because me and my wife are very interested in snowbirding. That's kind of the thing we're doing right now. We're trying to take these next few years to find a destination that we could snowbird from. And if we do want to be able to buy
Hmm.
something, it'll be coming from those assets in that
Okay.
corporation. Or could very well just be all converted to PII and we just rent something and use the income to rent something. That I could see that very much happening. But I'd like to be able to figure that out, have the options anyway.
Yeah, there's no right or wrong, my friend. You do it
No, I
organically,
mean,
you
it's
take your
it's literally
time, you yeah.
it's 10% of my portfolio. I want to be able to at least have something to liquid because I don't want to, I could swap these guys. I could always swap these guys, but I'll never go to cash. This money will always stay invested. It has to stay invested because I need to be able to draw the income from it, right? So
Yeah.
and then GLCL, I'm little gold FOMO right now, you know what I mean? This one moves, this one's a little bit more of an aggressive mover. It's like, I don't know what its beta is to gold, but it definitely goes up more than gold. When gold goes up, this one goes up a little bit. So
Yeah,
a nice
gold producers are always more
They're
volatile,
very
up or
volatile.
down
So
versus gold. Yeah.
having a nice little starter position into this right now is where I'm at. I'll probably increase it a little bit.
Mm-hmm.
And other than that, like I said, I'll be swapping USCL out mostly for a lot of Q day, and then see what other ETFs come out. But just keeping it simple like this
Yeah,
is how I want to do it because I need to comfortably draw income from my portfolio, and I need it to be as simple and unemotional as possible for me to enjoy my income. I
exactly.
if I really want to take a risk or I want to take a trade, I'll do that in my growth portfolio, you know. But when it
Yeah.
comes to this has to be, very steady. It has to be stable, and that's why it's very boring, and that's
Yeah, it
exactly how I
is.
want it.
And you've heard, right? QQCL, HHIS, HYLD, GLCL have all announced distribution increases,
Mhm.
slight distribution. The distributions can go up if it keeps going up. They could get reduced temporarily if it goes down. It's normal. It's part of the covered call premium game, right? So, but you must be happy that a lot of your positions have increased
Yeah, I mean,
distribution. So
yeah, no, it's great. Like I said, I don't pay attention too much to the distribution stuff. I
that's the
log
right
in.
attitude.
I log in. I say, we take about 30% of our income right now. That's
Okay.
that's basically what we need. We can't even spend it. We take about 30% of our income. We transfer it into our checkings account, and we'll either bank the rest or reinvest it. Right now, we're banking it. The market's frothy. We're just banking the income in our. We're not like we're just keeping it there. We'll reinvest it. Maybe I'm trying to time it, but at the same time, it's it's just what we are comfortable doing. We'd rather just bank it and then drop it at a certain time. We're not even sure where we want to put it right now because things
Good
are
problem
moving.
to have. Good
Yeah,
problem.
exactly, right?
Yeah. There's no
So, but
right or
eventually,
wrong.
yeah. So when we take about 30% of our income
Hmm.
and after our fixed costs, we have tons of money for guilt-free spending, which is a beautiful thing. And I'm having a hard time, not a hard time, but getting used to just being able to spend money frivolously. Like that's the best thing about this. Like when you live a fixed cost lifestyle and everything's just a payment, and once your payments are done, then you have money to spend at the end of the month, and
Exactly. And it's your
I mean,
choice. Spend it,
yeah,
reinvest it. Up
we're
to
spending
you.
it. So my job right now is how can I extract as much enjoyment from this process as I can? And I'm taking my time. I really like to go through I really like to go through a crash or a bear market and come back on the other side of it just to see how where I'm at during the crash or the bear market. Like this is where we're at. This is how handle it the best I can, come out of it and be like, okay, we've gotten through it. This is where we're at. I can feel comfortable spending more now. Just kind of like to see the progression. I would love to be able to, because figure out where we want to do for the winters, we want to be able to utilize more of our income. That's why we're investing more right now so we can have more income to be able to live a snowbird lifestyle once we figure that out. Right now, we're just kind of traveling around, looking at places that interest us, really just enjoying this process right now. But we're reinvesting about 70% to kind of increase that. Hopefully, we go
Yeah.
through a nice crash, nice bear market, and just get it out of the way, and then we can come on the other side of it, and we'll feel a lot more comfortable spending more of the income.
Wow. Can you imagine you talking like this 5, 10 years
Yeah.
ago that
Oh
you're
yeah.
looking
We're looking
forward to a
forward to a
bear
crash.
crash? You're
Yeah.
a changed man, my friend.
Yeah,
That's
well,
great.
one of the beautiful things that I've noticed, and shout out to a lot of the people in Discord, like Brian and Tech Trader and JJ and those guys. Those guys were really helpful with me when I was kind of like just confused about a lot of stuff. And really helpful community in there when you're really busy, so you can't answer all our questions. So
No, I
those
like
guys.
those guys. I met those guys in Toronto recently. They're
Oh, I
great
wish I
guys and
could
they're
have.
very
I
active in
Yeah.
the Discord, and I'm very grateful to them
Yeah, I
for
looked.
that.
I wish I could have been there, but those guys have been really helpful, taking the time to answer my questions. And one of the guys turned me on. So I was with Scotia iTrade,
Yeah.
and funny enough, like the amount of money I had with them too, I couldn't believe it. But they sent me an email saying that since I wasn't trading so much anymore, that they're gonna jack my trades up to $10 a trade. And
Wow.
I was like, you kidding me? Like, you know how much money I have with you guys, and and you're really gonna just do this? I said, I'm going to look elsewhere if you guys do not like. And then I wasn't happy with the rates that I could borrow against on margin or anything like that. And so anyway, I went and I think it was Tech Trader. He informed me to go to Wealthsimple. And I went and looked up Wealthsimple and had the meetings with them, and I was blown away. And I know margins. I'm not going to talk about it, but I'm comfortable using margin during when things are distressed and when assets become really cheap. That's what I kind of utilize. That's kind of like my hedge for my portfolio. Is like because I don't
Mm-hmm.
want to sell anything, but if we get distressed and I have a nice margin cushion, I will utilize it to my comfortability, of
Yeah.
course. So with Wealthsimple, their rates were like 4.45 compared to like 6.75, which is a huge difference. And they let you borrow against your Bitcoin. Which was a beautiful thing. And also they had a promotion that with every dollar you transfer, they'll match 1%.
Yeah.
Think about like the size of the portfolio that some people have. Like if you transferred all your money to a company that was going to give you 1%, and it's no joke, they're doing it through a 12-month period. So I think I'm getting like $20,000 reimbursed to me for free from just transferring my money to
Yeah, I
Wealthsimple.
mean, Simple's been on fire. They have good deals. They got a credit card now. That they're on fire. You
Oh,
know, Power
they
Corporation owns that one. So yeah,
and
it's a
like they're
good.
it's simple. It's the new language of money, right? And
Yeah,
you know what I mean? They make everything for so like the way they have their margin account set up, like exactly when you're going to get in trouble. Like there's platforms that tell you
yeah,
like where your cushion is, like where if you're going to be in a margin call, like it's very well put together. It's a
yeah.
beautiful setup, and
It's the future, man. It's like the
it's the
Canadian Robin
future.
Hood, right? And look at Robin Hood
Yeah, and
stock.
I wasn't familiar with how Robinhood really worked, but if it works anything like this, like
It's
what
similar concept, I believe,
yeah,
right?
yeah,
Like,
they're just evolving, and like with my portfolio amount and my size, I have my own personal assistant. So I have a guy that whenever I need anything, I just message him, and he's like my guy. And he's been
cool.
on point. He's been on point. Every time I have a question about anything, he just answers me right away. If I was calling iTrade, I'd be on hold for 30 minutes
Yeah, the
and
big
talking to
banks, right?
somebody that didn't understand anything. So shout out to Tech Trader for sending me there. I really appreciate that. That's making a big difference because margin is, like I said, margin is a part of my investing, my strategy, and with it's my hedge to the downside. So I don't want to sell my assets, but if the market goes down,
You want to
even
buy
with
more.
yeah, with the cushion I have, like it's nice to reinvest the income, but I'd like to put some fresh money to work as well. And even with the amount of margin they're giving me, like even like 25% of my allotted margin is still an amazing amount to invest, which is basically my comfort zone. So that'll be something that's going to help me to at least get some outsized gains when the market corrects.
Yeah. Well, Luke, You've been with us for a while. I really appreciate
No,
your time. I know the audience will resonate a lot with your story. And thanks for all the shout outs. Obviously, you've matured a lot as an investor, and I'm really happy for you and your wife, and really appreciate you doing this. Well, we're all in it together, my friend, and I congratulate you, and the future is bright for sure.
I appreciate
So
it. And thank
thanks
you
so much
very
for your
much,
time,
man.
sharing your portfolio and everything.
Oh, thank you very much, and congratulations to all your success, man. I've been watching you
Appreciate it.
for years, and you're just starting to like really get some exponential growth with your channel right now. And it just shows consistency over time, man, and it's really starting to pay off for you. So I'm really happy for your success.
Thank you. Thank you, Luke. It was a
No
pleasure
problem.
speaking to you and say hi to your wife for me. And maybe we'll do this again in a few years. And who knows, maybe in a few years you'll have your own channel teaching people. I mean, I love that. You're a great example. So thanks again for
Oh,
doing this, man. Take
awesome,
care.
man. I appreciate it. Thank you very much.